Welcome to Requity Insights, a channel dedicated to documenting our journey to 100 world-class communities.
Welcome back to Requity Insights. I'm your host, Velez, and I'm joined by my co-host and the CEO of the Requity Group, Marma. In today's episode, we'll discuss the difference between long-term seasonal campgrounds and short-term transient campgrounds. Our episode will focus on the pros and cons of the different models, how location affects the strategies, what these strategies do to your park's overall valuation, how the campground guest profile changes between the two strategies, and how some operators utilize a hybrid model to try to capture the best of both worlds. Given the recent surge in demand within the outdoor hospitality industry, today's topic has become increasingly important for real estate investors to consider as they build their strategy for acquiring and running their campgrounds. Dylan, could you begin by explaining the difference between long-term seasonal campgrounds and short-term transient ones?
Sure thing, Lewis. This is a topic that comes up quite often, so I'm excited to share some of our thoughts on this. But as far as what a long-term or seasonal campground is versus what a short-term, or often referred to as a transient campground is, I will break down the difference. A long-term, or more often referred to as a seasonal campground, is a campground in which most of the guests are paying up front for the entire season, or in our case, because we're operating mainly in the Southeast where we're open 12 months a year, they're paying for the entire year, right? So that you often have an annual site agreement or sometimes a seasonal site agreement. And we can get into all the different types of this, but generally speaking, what that means is this is still a recreational campground that is being used for temporary visiting, but the difference is that these guests will keep their camper there year-round and treat it more like a second home. So it's often not their primary residence, but it's a place that they can go and come on the weekends or be able to work a few weeks a year from, and be able to enjoy their summers together, winters together, depending on where you are in the country, that kind of thing, right? To be able to build communities that will have a long-term place to come and visit. Now, on the other side of things, you have a transient campground, and this can be for a variety of reasons people are coming there, whether it be for utility reasons or for recreational reasons. But a transient campground is a campground where the majority of your occupancy is coming from short-term stays, which could be anywhere between 1 week to even a few months could be considered a short-term stay, and you have a lot more in and out, and generally, as a result of that, you're taking on more perceived risk, therefore you usually have higher cash flows.
I think it's important to note that even on the seasonal site agreements, it's still for recreational purposes. How does that annual site agreement differ from a traditional lease agreement that you'd see in other industries?
Well, the site agreement just does spell out the fact that this is not a permanent living location, and this cannot be your primary residence, and a few other nuances depending on the state you're in, but that's very similar to a lease, but it makes it clear that this is not to be a permanent living location.
How do the revenue streams differ between those two types of campgrounds?
So the revenue streams can be pretty dramatically, especially if you're a seasonal campground, you are collecting payments, whether it be upfront. Some people collect, I've seen it twice a year, I've seen it quarterly, but regardless, if you're looking at your books on an accrual basis, which you probably should be looking at them on an accrual basis if you're in the campground industry, then you'll see more steady revenue, consistent revenue coming in each month throughout the course of the year. Whereas on a transient campground, you will see much more ebbs and flows based on the seasonality of that location. So generally speaking, the revenue streams on seasonal campgrounds, you have less revenue overall, right? Lower effective gross income per site per year. You usually also have a lower expense ratio as well, because they don't have as much day-to-day either staffing or overhead or marketing costs that you might have on a more transient campground. Therefore, you end up with an NOI that is still lower than the transient, but again, lower expense ratio and more consistent top line. Whereas on the transient side of things, usually there should be a pretty material jump in income if you converted it to transient. Yeah. But then usually instead of running, say 30 to 40% expenses like you would if it was seasonal, you might start looking at running at 50 to 60% expense ratio. Yeah. So while you're making more money, you're taking home a lower percentage of that money as far as NOI goes, but you're still taking home more money, right? I want to make that clear, is that your cash flow, all things being considered, should be more, and we would target a higher in-place yield on a transient campground than a seasonal campground, especially because what happens if weather doesn't work out one season, or if there's something comes up and bookings slow down, or there can be all kinds of different things that could cause ebbs and flows within more transient campground. Yeah. So as a result, we want to see a higher ROI to justify that.
Yeah, that makes sense. Can you discuss the pros and cons of operating a long-term seasonal campground?
Yeah, so the pros of operating as a seasonal campground are as follows. Number one, you have consistent revenue. Makes it a little bit easier to sleep at night knowing that you have your bills covered throughout the entire course of the year, sometimes up front in the very beginning of the year because you have full occupancy or a large percentage of your occupancy already in place. Yep. You're also able to reduce your utility risk by seeing increase in utilities, because generally on seasonal campgrounds there is a bill back for utility usage, especially usually most commonly electric usage, but we also have seen some that have water and sewer. So you're able to reduce the utility burden, especially if you expect utilities to jump over time, like we've seen some major jumps in electric recently. It's nice to be able to have that absorbed by your guests, which is common at a seasonal campground. Yeah. In addition to that, you have a little bit less stressful operations. Generally, you have guests that have been there for many years, and a lot of instead of being as focused on just marketing and tracking your online ad spend and tracking your call center or on-site team to track their conversion on all of their calls for the transients, you're usually more focused on just the occasional long-term inquiry where you're giving them tours and leasing up sites, more similar to what most people are probably more familiar with, which is touring an apartment and checking it out and then booking, filling out an application and having an annual site agreement kind of thing. Yeah. That's another thing too, is that I guess you could consider it to be a pro, is that because you are having guests sign for annual site agreements, you can do background checks as well to monitor the quality of people that are staying in your campground, as when you have more transient, pretty much anyone can come in and book, and that could lead to problems. Yep. Then on the expense side of things, you generally, because you're not fielding constant calls where you have hundreds of bookings a week, you usually can run a little bit lower payroll because you don't have as much support staff there just monitoring check-ins and check-outs constantly. Yep. You also usually don't need marketing quite as much, and there may be less events depending on the campground and location target audience. Maybe more so where some transient campgrounds I know of have 6 events a day on Fridays, Saturdays, Sundays, right? And it gets very hectic and chaotic, and I think for people that are coming every weekend, they probably get burnt out by having that many events, and they might just want the occasional weekend where you have food truck and live music, but it might be overkill to have constant activities at all hours of the day. They might value, we find that they usually do value a little bit more quiet time if they're at more of a seasonal campground. So that also results in lower event spend and whatnot. So I think those are the pros of seasonals. And the other thing I would add to it is you also have chances of a lower cap rate at exit. So this is my view on seasonal versus short term. the big difference here, you say, oh, well, if you're making more NOI, obviously you should run everything short term because the name of the game here is just NOI, right?
Exactly.
NOI creates value, so why would you ever do anything that would not position you to have the highest possible NOI there is? And my response to that is, well, if you have seasonal, chances are you're going to sell at a lower cap rate if you go to sell. And you also probably can refinance at a lower cap rate. What we have not completely seen yet is you don't have unique lending options that are exclusively lending to seasonals, but usually banks are more comfortable with a heavy seasonal component. So it is a little bit easier to get better financing options. But I think that the end buyers are also willing to pay a lower cap rate because they're looking at it from the standpoint of, we have options with this and we could run it transient if we wanted to, or we could keep running it seasonal and enjoy the consistent revenue. And I just find that most institutional capital that I've talked to, they prefer to see that steady, consistent revenue. There are exceptions to that, but that's generally what we see.
Yeah, that makes sense. One thing I'd like to add is on the seasonal campgrounds, it's common that there's a bit more of that community aspect to it as well, right? Which I think could be deemed the pro.
Yeah, exactly. You have more of the community aspect, and then in terms of the cons, of the downsides to it, I think that the only real downside to it that I see is just simply you are making lower NOI, which is a big downside, but I think that's the major downside. But I'm also biased because we have mostly seasonal focused sites at this time.
Okay, yeah, it makes sense. Kind of as a contrast to that, what would you consider pros and cons of the short-term model?
Mm-hmm. Well, I think the short-term model starts to become more of a business, which means that if you are very good at branding, marketing, food and beverage, hiring, building and operating a business, you can see those become clear advantages that could build sort of a moat around your business or give you this experiential place that people are going to keep coming back to that outperforms your competition because you're a better operator.
Gotcha.
So I think as you go heavier into short term, your operational capabilities start to really either make or break you. And I think that's where I think a lot of people coming into this space are saying, well, I'm seeing these short-term places that have have limited branding. They don't have the greatest site mix, so we can update that to get everyone full hookup sites or something along those lines, bigger sites. They're seeing that I can really make an impact through Google and Facebook marketing on getting exposure to this place. I can upgrade the website, I can upgrade the online presence, and that creates a whole lot of value. So I think that it's a pro for some, and for others that would be viewed as a con because you'd say, well, I don't want to run more active business like that, right? So I think it's really kind of up to the investor to decide whether you consider that to be a pro or a con. I think that the other thing you're going to look at as probably a pro or a con is that you have more people coming in, so you're getting broader exposure by getting a lot of eyes. That's why even on the places that we have that are seasonal, we like to keep a portion that's transient because it's good to get those Google reviews, it's good to get the exposure because those could be your potential long-term guests once they come and check it out for a weekend and fall in love with the place, right? Yep. So that is pro and con. You have more, if you're looking at, say, inflation or if there's a increase in demand, you're able to tap into that quicker than a piece of real estate that has long-term leases, right? You're going to see that the benefits of that take shape right away. Yeah. And then again, you have outsized returns because you are generally, though running at a lower margin, you're seeing significantly more top-line returns possible, and you have a way higher probability of seeing significant increase. Like, we have one campground that we bought at maybe an 8 cap, and I think today it sits at a 14 cap, and that doesn't happen really very often on seasonal campgrounds quite as much, whereas on a transient, if you're doing things right, you have that potential to see a big swing in a pretty short period of time, which is nice to be able to see. And I guess that's another advantage of having a broader audience coming in and out, is that if you're going in as a value add investor, sometimes because of the tight-knit community that you have on most campgrounds that are seasonal, there's usually a lot more resistance to change, and it can be a lot more difficult because you're having to sort of win over a big audience of different guests. And whereas transient, you find that maybe there's less resistance on the front end. I will say that we have seen that there's even transient campgrounds have a lot of repeat guests, so even they are going to pay attention to you, and they're going to say, well, we like you better than the last owner, or we like you worse. You still will get that. And for us, we always try to do what we can to get those reviews leaning in the positive direction of saying, wow, lots of big improvements since last ownership, or, whatever it might be. But you don't have, at least you're not there with hundreds of people that have been coming every summer for the last decade that you're now kind of having to win over, versus just like every weekend having a mixed bag of new people and repeat guests. I think so it's maybe a little bit less friction coming in on the on the ownership transition side if it's an acquisition.
Yeah. In terms of guest expectations, what would you say? Is there a difference between those two guest profiles? Do people expect more amenities on the seasonal versus the transient? Or I know you alluded to you mentioned the fact that on the transient ones, they expect more events. Mm-hmm. There's a bigger event schedule, but would you say there's a big difference between those two?
Yeah, I mean, it just depends on the location, and I think that's something we haven't hit on too much yet, but I need to touch on, is that you need to be focused on the location of the property, because some properties are just going to be terrible properties for seasonal, but they would make great transient properties. And then some properties would make great seasonal properties, but terrible transient properties. So we can go more into that, but in terms of some of the, I guess the differences and expectations that you see from the guest side of things will be kind of blending these two questions together. Will be on a seasonal campground, they want a location that they're going to enjoy coming back to for years to come, right? We usually target maybe a 20% turnover each year, which is a pretty high retention rate, which means that people are staying for an average length of maybe 5 years or so, right? So you need something that's going to draw them there. And of course, hopefully the number one thing becomes the community, the other campers there that they build relationships with. Yeah. But usually, even before that, you need more of an initial draw, which is, for us, usually a waterfront. Usually it's a big body of water, whether it be a major lake or intercoastal or the ocean, somewhere where you can go, hang out. I'm the same way, right? I love being able to sit by the water. We all are just, I think human nature just attracted to coastal locations and to be able to hang out by the water, and in many cases to be able to go either fishing or boating is what really is the number one thing people are looking for as their kind of escape place, happy place to come and visit on their weekends and spend their free time. So you need that initial draw. And then after the initial draw is there, hopefully people build strong relationships. And then past that point, you definitely have an expectation for events, as we mentioned, because we want to do stuff to kind of better foster the community, create that experience for them. But it's probably a little bit different, maybe a little bit of a slower cadence, because it's more like a slow burn over a long-term stay versus getting it all in within 1 or 2 day jam-packed vacation, right? Whereas on the transient side, you're going to see, as far as locations go, you don't need a location that's going to keep people interested in the place for 5 years. You need a reason for them to come there for a weekend, right? And maybe come there for 1 weekend every 6 months or every 12 months. So we find that better transient locations are state parks, right? We all love the Grand Canyon, but do you really need to go there every weekend for your entire summer? Probably not, right? Even you can say the same thing probably about the Smoky Mountains, though there are mountain lovers that definitely do love being out there and spend a lot more time. I find it's still not maybe as strong of a draw for a seasonal as the coast is, speaking on average. Yeah. Same thing goes if you have properties. We've properties by major zoo or major attraction destinations that people are going to come and maybe check it out either once a year, once every 6 months. For some, it's even once a lifetime. But there are things that are drawing people out there often enough to where you're going to get a lot of transient people coming in and out to visit, right? So that, I would say, is a big difference, is the event schedules and then the locations themselves and the reason for wanting to come out to this location.
Yeah. You mentioned that the Requity Group does a hybrid model on a lot of their acquisitions. Can you walk us through how you've utilized a combination of both of these strategies in many of your acquisition and how that model's proven effective for you?
Yeah, so we generally like to live by kind of the 70-30 motto, right? Where we target as a portfolio about 70% of our portfolio being more focused on long-term, either annual site agreements, seasonal stays, and then 30% being optimizing revenue on short-term stays, and most importantly, giving us new eyes on the property, creating additional exposure to our properties. That doesn't mean every property we have is ran 70-30, but as a portfolio, that's what we like to do. And then on our larger properties, we definitely try to lean close to that ratio. Yeah. It could be 80-20, it could be 60-40, but that's generally what we target. And as far as how this benefits you, I'll kind of hit on, again, we're doing a lot of pros and cons, but the good things and the bad things about this model. Good things about the model are that you get that outside exposure, right? We want to constantly be getting exposure and basically winning over people that are coming out to our campground for the first time and saying, great things about us. And then when they think about one of our places that offers seasonal stays, they say, well, we'd love to book here for long term, right? Or we'd like our kids to grow up coming here every summer or every winter, or whatever it might, depending on their location. So I think that has a lot to do with why we like the model, and probably the strongest piece of the model. The downsides that come to mind, well, I guess the other pro is just you get a little bit more income than you do on traditional seasonal, because you kind of get the stability of the long-term revenue stream mixed with the additional kind of, call it alpha outperformance that comes from having the short-term piece of the income. That kind of leads me to the downsides. The downsides are it definitely is a little bit more expensive when it comes to your operating expenses to run a deal like this, because it's not clear-cut one way or the other. So you kind of have to have your expense load be somewhere in the middle of the two. And there are certain things that just because you have for instance, think about your staffing. Like you might have an easier time running 5 days a week staffing and have 2 days that are completely off if you were seasonal, because everyone knows each other. It's not as high maintenance, not as much in and out, as many check-ins. But if you had that same place that has, now that you have some transient sites coming in and out, you may now have to have 7 days a week of on-site staffing, right? And then you may have to have a little bit more events to draw your transient audience out. So it becomes more of this hybrid model, which does affect your bottom line a little bit, but I think the pros outweigh the cons there. The other downside is that sometimes there's a disconnect, and the seasonal guests don't like the short-term guests, or the short-term guests don't like being with a bunch of seasonal guests, right? Yeah. Like someone comes there for a weekend and they realize that the bulk of the community stays here and they've been here for years. They might feel like a little bit of an outsider, right? And they might say, well, everyone else knows each other. I'm just getting here, and just may not be as comfortable as them coming out and being around a bunch of other people that are there for the first time and kind of being able to share in that experience together. Yeah. And then similarly, if you're there seasonally and everyone knows each other and you're getting some people, say you get some people that come in and party and being loud or whatever, right? Like it may just turn them off and say, like, we're not a big fan of the people that come in for the short-term stays, right? So you have to try to be thoughtful on how you set everything up to be effective, kind of blending the two together.
Would location of where these people are kind of set up in the campground kind of play to that? So would the short terms kind of be more let's say in a specific area of the campground? Would that be the ideal setup?
We try to do that, right? We try to look at the campground sites and determine which parts of the campground is better fit for us to target these being our seasonal sites, and then try to keep certain, maybe on the more short-term sites, maybe we'll go in and pave or put concrete pads down, maybe paver patios we might do more of like giving them a fire pit and a picnic table, because on the long-term sites, they'll usually invest into a lot of that stuff themselves and kind of want to customize it. Yeah. But we try to set it up in a way where it's more geared towards a short-term audience. So we definitely do try to do that, and that's found to be pretty successful so far.
Yeah, that's great. How does the campground's location affect which strategy you think is best to implement?
Well, like we hit on, it really just comes down to why people are going out there. Are they going out for long-term destinations? Is it waterfront, or is it more of a destination type location? Or again, we didn't really hit on, is it a workforce type of an area where people are coming in for contract labor or temp labor or something along those lines too, right? That may be another thing you have to put some thought into, and just understand where the demand is coming from on your campground.
Yeah, that makes a lot of sense. Are there any specific market conditions that make one strategy more favorable than the other?
Generally, camping is pretty resilient. I'll start with that, and that if you look at historical numbers, we've seen that even during downturns, people still do like to camp, and they still do view it as a much more affordable form of traveling versus traditional flight to hotel vacations. Yeah. So there is that, but I do still believe that the volatility will be visible, and you will see less bookings as people as consumer spending starts to tighten up a little bit, and people start to feel more uncertain about what the future holds for them. So I especially think that with the higher end resorts too, if you have a short term, more resort style place that demands a pretty high ADR, I think you're going to see rates come down a little bit to kind of keep the occupancy high, and then if rates come down to nicer places, that may pull occupancy out of the less nice places, right? So I think that in general, the short term will feel it more and be more of a clear reflection on the state of the market. Whereas I think if you look at most long-term campgrounds, they seem more steady throughout market cycles, because a lot of the times the owners are working alongside their guests to try to find reasonable price points that make it a win-win for them to stay in long-term and see it through. And there's usually a lot of organic loss to lease on most long-term campgrounds, just given the market is not overly competitive. So that, I think, keeps everyone in. And in the event you do have people move out because of tough times or downturns, because of the loss to lease that is usually in place with long-term guests, you're usually able to see, even with lower occupancy, the decrease in loss to lease that could take place during a lease up could actually benefit the owner, right? We've heard several stories of that where, though people saw a little bit lower occupancy, the decrease in occupancy of some of the longer term guests opened up room for them to bring in new guests at market rate, which helped offset it. So I think that my belief is that seasonals, long-term sites are going to be a little bit more resilient throughout that, but that also means that they may be capturing a lot less upside during the good times, right? Yeah. So it just comes down to what level of volatility you're going to be comfortable with.
How does the marketing strategy differ when it comes to attracting long-term seasonal guests versus short-term transient ones?
So the marketing strategy, it really depends on where you sit, but if you look at most long-term or seasonal campgrounds, your marketing strategy may be more front-loaded to the beginning or before the season starts. You may be doing a ton of just build-up over what's going to take place next season and how you offer seasonal sites to try to get opt-ins or to form a wait list if you have existing opt-ins or you're fully occupied. And then throughout the year, you may not need as much marketing depending on your leasing schedule. In some cases, we have some that the site agreements all start at the same exact time. example, March 1st, and we have some where it's staggered throughout the year. There are pros and cons. I personally probably lean towards staggered leases, where it's more of a slow burn marketing, because I don't like the idea of having a bunch of a major lease up once a year, and if you have too many people leave during a turnover, then that's going to put you in a tough spot as an operator, versus seeing a few leases renew every month gives you the ability to constantly be marketing a little bit throughout the year to fill in those sites. So depends on how it's being run. I know a lot of people that love just January 1st or March 1st or whatever, whenever your season begins, they try to have everyone lined up to fully book again for the next year. And I think that sounds great in theory, but it does come with downsides, whereas the staggered approach similarly has some pros and cons to it. But that's the thoughts on the seasonal. But generally, there's just a lot less marketing. And it's a little bit of like a slower burn when it comes to marketing, whereas on the transient, I mean, you're not just trying to get people to buy into the campground for the entire year. You're trying to get them to come on specific weekends throughout the year, right? And you're trying to get them to come not just on the holiday weekends, because those are the easy ones to book, but you're trying to get creative and find ways that you can throw events or themed weekends constantly to be able to get them to come on the off weekends, right? Which is really when you want to try to figure out how do you get them to book that. Yep. And then how do you get them to book the weekdays, right? What are your pricing strategies that incentivize people to book off weekends and weekdays and off times of year, which requires a lot more creativity, a lot more thoughtfulness in marketing. So marketing becomes more of like a full-time job at that point when it comes to your transients, to really be spending a lot of time being thoughtful about your revenue strategy, being thoughtful about how you're positioning different times of year and that kind of thing. So, and usually requires a larger budget as a result of it.
Okay. How does the campground guest profile change between the two strategies? I know you've already mentioned some of these details, but
the guest profile, it really, I hate to say it depends, because I feel like that's my answer to all these questions, but the guest profile does depend on why people are going out there, right? In previous episodes, we've talked about, are they there for recreation or utility? Yeah. Of course, we've already set the expectation that we're referring to seasonal campgrounds as long-term recreation. Yep. So just keep consistent with that. We'll also talk about the transient being there for recreational purposes mainly. So in terms of the guest profile, assuming everyone is there for recreational purposes, I think you're going to have to look at the location itself, and I think that's going to be a huge indicator as to what your guest profile is. I mean, we have some that are seasonal campgrounds that are more, call it mature audiences that don't have as many kids, that are there to boat, to get together with other adults, have just get-togethers on the weekends, and that's why they're there. We have some that are heavier on it being all about their families and having a lot more younger kids there, and it's super family oriented, and that's where the events, we cater towards them with our events and our activities. And similarly with the short term, I could say the same thing about a few of our campgrounds. We have some that are heavier short term, that have amenities that are probably geared more towards mature audiences, maybe not as family focused, and then we have others that are extremely family focused, that are geared more towards attracting families that want tons of activities to keep their kids entertained. So it just varies on the deal.
Yeah, very location specific.
Yeah.
Lastly, how does having either of these models affect your park's overall valuation regarding exit cap rates?
Yeah, so this is really the million-dollar question, and I think in terms of where we sit right this moment, there's still a lot of price discovery taking place within the campground world, and we're still seeing really wide variety and a lot of discrepancy between where cap rates sit on different locations that are made up of different site types and different mixtures of short-term, long-term, and whatnot. So my general belief is that long-term should always sell at compressed cap rates versus where short-term would be. Yeah. It's the same reason that apartments are historically usually 200, sometimes 200 plus basis points below where hotels trade on the exit cap rate. It's the same thing here. I think that it should. I mean, that right now, again, we're seeing ebbs and flows, and we've bought some properties based on the thesis that we thought it was mispriced because we thought we were buying a long-term focused asset based on a short-term cap rate kind of thing, right? Where to us that just didn't really fully make sense. It seems like that there's a lot of value in that if you're able to do that.
Yeah.
But I think over time, as the industry matures and we see more stabilization, you will see there be, I would guess, at least 150 basis point spread between where long-term and short-term are. Okay. And what that does to the valuations is it actually makes it more consistent. So it actually takes the same campground as we talked about. You could run it long-term or short-term, but at the end of the day, your value might be the same. So the reason I say that is because though running it short-term is going to clearly drive more NOI for you over the course of time, when you take the NOI against an 8 cap, and then you take the lower NOI against a 6.5 cap, you could end up with the same price per site on your exit. So you do a lot of the extra work, or you take on what could be perceived as extra risk on the short term. You've made more money along the way with a higher yield investment. Yeah. But at the end of the day, I think the market will probably find this equilibrium of some sort. I still think short term could sell for more per site, but that gap kind of diminishes as a result of, even though the NOI spread is there, the cap rate spread will be there to kind of neutralize it a little bit more. Yeah. So that way the next ownership group can say, well, I want to run this pivot back to long term and get some cap compression, or pivot to short term to get some, cap expansion but more in place NOI. So I think that's really my view on pricing when it comes to the exit cap rates, and I'm curious to see how it continues to play out. And of course, a lot of campgrounds are kind of hybrids, so it's going to be up to the potential purchasers in that situation to kind of evaluate how much is long term, short term, and kind of try to put a blended cap rate that they deem reasonable on that one.
Yeah, that makes sense. That's all for today's episode. Thank you for watching. We hope you gained valuable insights into the differences between long-term seasonal campgrounds and short-term transient ones, and the pros and cons of each strategy. If you enjoyed the content, please remember to like, share, and subscribe. We'll see you next time.
Thanks for tuning in to another episode of Requity Insights, hosted by our team at the Requity Group. You can find recordings of all shows along with our opt-in form to set up a call and view future investment offerings on our company website, therequitygroup.com, also listed in the show notes.